Alrighty, welcome back, dear diary. Where are we at this week? What notes are we going to take? What lessons did we learn? We really haven't learned a lot, but it was always good this week to go through um, the discovery process of have I changed in ways that lead to profitable outcomes. And typically, I do have profitable outcomes, but the last 3 weeks, I have not been executing at a high level. And so today, we want to talk about maybe 4 or 5 things. I've got my notes right here. 4 or 5 things that make trading difficult. And it's not so much that the market is difficult, it is the habits of humans. It is not having the structured system in place to ensure that the boxes are checked so that you have a better chance of a profitable outcome. And so, dear diary, welcome back to Diary of a Stock Trader. Each and every week, maybe a couple of times a week, I will go over some lessons learned as well as take a little bit of a dive into the stock market itself. We're going to do that today because of the last 3 episodes I told you we were going to start to get to it. So we will look at maybe a stock or two and talk about some of the things that you should be learning. So again, welcome. I'm Eugene Brown. Took a little bit of money, turned it into a lot of money. You can see that video in my bio where I show you the money. And so what I've done now is I'm back to full-time trading. I took a little bit of a break for about 4 years almost, although I was still trading. I just wasn't trading as much. But now we're back to full-time trading. We're all in. And so I want to share with you my journey through a diary that is online that will hopefully be educational and at times entertaining. And so, so let's get started. Why can trading be so difficult? I'm going to check my notes here. Number one, I've got written down, we trade against our own emotions. And what I would say is every time I have a new client, and one of the first things I say to them is, are you comfortable? Are you familiar with who you are? Do you understand who you are as it relates to money? And because once money is involved, people tend to get emotional about money. I know people who will have a heart attack if they lost $100. So you've got to know who you are as it relates to money and your habits and your background and your history with money, because all of that will play a part in how you emotionally move forward. If you're emotional when you are moving money, it will cloud your judgment. It will make you do things that you should not be doing. And one of the things you should not be doing is gambling. And this week on our training call, I talked to the members about being too aggressive, taking shortcuts, gambling. And when you start gambling, you start taking greater risks. And when you take greater risks and you know that they are, you will find that you will start to get very, very emotional. And emotions will cause you to maybe buy a stock at a higher price, maybe because there's the fear of missing out on gains. Emotions will cause you to take on size, meaning, where you were comfortable investing $1,000, you are now in an emotional state and you're now investing $5,000 or $10,000. You're not where you should be emotionally. So again, I'm looking at my notes. Fear makes us sell too early. Greed makes us hold too long. Gosh, I can't tell you how many times I talk to my guys and they're getting better about being greedy. There's a saying that says, bulls make money, bears make money, and sheep get slaughtered. And you'll see that banner actually on my YouTube page. To the right, you'll see bulls, bears, and sheep. And if you're greedy people usually they usually have some problems. You've got to know when to take the money, and you base all that on technical and fundamental analysis and what your goals are for the trade. And when you step outside of that sort of structure, a step outside of what that plan was, then you tend to make an emotional decision. Hope keeps us in losing trades. Gosh, hope is a 4-letter word. I'm like, don't cuss at me when I'm talking to some of the clients. Well, Eugene, I was hoping. Hope. Man, hope is not a strategy. Hope is not a strategy. Hope will cause you to have problems. Being hopeful in life is great, but being hopeful in the stock market is not a good look. Don't do that. Fear of missing out makes us chase stocks after the move has already happened. I said that earlier. The market doesn't create your emotions. It reveals them. The market reveals your emotions, whether you're too high or you're too low. Number 2, everyone wants quick money. Well, we live in a microwave society. And I know people look at my example when I went from 5K to 2.4 million in about 11 months. And people say, well, Eugene, you made some quick money. But during that time, you guys, I was really focused in on one strategy. And I stuck to that game plan. And at times I was aggressive. But I had a pretty good plan. And obviously I executed very, very well, and it certainly paid off. But, when you want quick money, it can lead to irrational decisions. Take your time making money. Money doesn't have to be made in a year. But with my members, my clients, I want them to continually move the ball forward. I want them to get used to taking the money. And I tell them all the time, I'll say, take the damn money. And the reason why I always tell them to them that way is that I cannot go broke taking profits. And I know through experiences, markets go up and down, and sometimes you think a stock is going to keep going up. Reality, it's actually about ready to go down because a lot of people bought down here and now are way up here, and you're greedy and you keep thinking and you keep hoping. Take the money. Stop trying to get rich quick. Get rich in increments. Get rich systematically. Get rich with structure. Get rich with purpose. Get rich with a very well thought out game plan. And it takes a little bit of time to kind of settle into a game plan. But the more you refine it, the more you think about it, the smarter you get, the more that plan takes shape. Let's see here. Social media shows Lamborghinis. Yeah, there's a lot of Lamborghinis being shown on social media. Nobody shows the blown up accounts. A few weeks back, as I kind of just got started trading, I was super happy, emotions, when I made $12,000 for the week. And then I had a rug pull, meaning I was in a stock that got removed from the NASDAQ without notice. I didn't know it was coming. Maybe I should have done more homework. And when the stock was going down, instead of me doing what I know I should do, which is sell it quickly, I instead probably was a bit of an emotional state, and I decided that I was going to buy it down. And the stock kept dropping, and I'd buy more, and it kept dropping and dropping. It's called trying to catch a falling knife. And if I use this marker as an example, if a stock is falling and you try to catch it and you miss it, or you catch it late, it's going to cut your hands. So trying to catch a falling knife is not a good look. It's not a good strategy. There's something always new in the stock market, something different every week, every day. And it is important for you and important for me to act responsibly without emotion to be able to manage your account. So controlling your emotions and don't try to get rich quickly will be beneficial to what you are trying to do in the long run. Success in trading is usually boring, and that is very true in a lot of ways. You know, I spoke earlier about having a systematic, very structured way of identifying stocks and qualifying them and entering and exiting them correctly. With a systematic way that you do that, it can be sometimes a little bit boring, and so there's nothing wrong with that. You're not here to be on some dopamine high, to be gambling, to rolling the dice. That's not what we're here for. We're here to grow a brokerage balance greater and greater and greater. And ideally, you know, if possible, or certainly you can make it so that you grow it in a tax sheltered account. That way you're not paying taxes on it. Professionals think in years, amateurs think in days. That too is true. You know, many Americans are certainly very, very broke because their focus is very, very narrow. You think about what we do here on in and on social media, where, you know, someone may have some good content that they're sharing, but if it doesn't capture your attention in the first 3 to 7 seconds, you just keep scrolling. And people, the images scroll. The imprints on your head, in your brain, there are a lot of them. And so if you're thinking in days instead of months, you know, maybe a few years, you're not thinking about it right. You know, you need to have a little bit of a longer term view, because it's going to take you some time to get good at moving money. Maybe some of you are naturals and it didn't take you long at all, but a lot of people work. And so when they're on my training calls, you know, they've seen the markets throughout the week, but how much they've actually had time to participate in them, to study them, to look at stocks throughout the week can be certainly a different story. Number 3, the market doesn't care about your damn opinion. It doesn't. The market is moving forward. It's always forward looking as well. You got market makers that are trying to create a market between buyers and sellers, and no one really cares what you think. If you said this stock, you're screaming to the heavens, should be going up, and here are the reasons why, and all this other craziness, well, apparently that's not what the market is saying. That's not what some of the buyers or the sellers are saying. The market will make some of the smartest people, some of the most successful people, feel very foolish. And I talked about, you know, in other videos, why people who are successful people have a hard time with moving money. And there are a lot of reasons, and some of those reasons I'm talking about here in this diary session. The market is never wrong. You can have a great research, strong conviction, confidence, and still lose money. The market rewards probability, not certainty. I spoke about that earlier. You need to have a systematic way that leads to a favorable outcome. You've checked certain boxes, and when you've checked certain boxes on how you like to trade and what setups you're looking for, you need to ensure that the boxes that you have checked all increase the probability that the outcome is a profitable trade. And so I teach a lot of that in my trainings. Quote, trade what you see, not what you believe. Trade what you see, not what you believe. Number 4, most traders lack a process. Sound like a damn parrot. I've already talked about that earlier. All and everything that we've been talking about, you got to have a process. Many traders have goals but no system. Spoke about that already. Why am I entering? You should be asking yourself, where am I wrong? What's my profit target? How much am I risking? I've already talked about all of that. Ooh, Lord. Professionals follow a checklist. I talked about that already. Gamblers follow emotions. Number 5, and there's a quote before number 5. It says, discipline beats intelligence every single time. I'll say it again. Discipline beats intelligence every single time. If you have a very disciplined way with which you go about doing things, that discipline will lead to profits. If you treat your trading like a business, it will pay you like a business. Number 5, the greatest battle, is between your ears. Charts are easy to learn. They are, but it takes practice. And we'll look at some of that here in a second. Managing yourself is hard. And that goes right back to the very first thing I always say when someone's a new client, like pretty much who are you? And who are you as it relates to money? That speaks to managing oneself. Humility, patience, self-control, risk management, all things that I've talked about. Eventually you realize you're not trying to master the market, you're trying to master yourself. And so listen to me, guys, if you're going to get good or you wish to enter the realm of moving money in the marketplace, take heed to what I just went over, and there are many more reasons. Let's take a look. I'll pause this. I'll turn the camera around. Let's take a look at some stocks. Okay, so here's my setup. Not that you really care, but I have one monitor, 2 monitors, the laptop itself, and a third monitor. And then up here is TV for CNBC News that I'll look at in the mornings while I am trading. Typically, I get up about 6 o'clock at the absolute latest, and I like to do things in pre-market. Let me see if I can move this light a little bit. And so what we're looking at is Thinkorswim. And Thinkorswim is now owned by Charles Schwab. We're looking at a chart on Marvel Technologies, and the symbol MRVL. On the left-hand side, there is live news. So if I want to connect Marvel with the news, I certainly just click on this red little button here, and I can connect them, and it'll connect time and sales as well. And you can have watch lists and scans and all these things that you can do with your platform, in this particular platform. And so we were talking about why people find the market difficult, why typically the reason is it exposes people's flaws, exposes human nature. And that's why trading is a bit more difficult. But the things you got to learn in trading is technical analysis and fundamental analysis. Technical analysis is all your charts, chart patterns, as well as fundamental analysis, which is your numbers, some of the news, some of the things that happen throughout the trading day. And a lot of the stuff you look into prior to the opening of the market. Ideally you want to set up some open orders, you want to set up some alerts, you want to do a number of things that allow you to prepare for your day. And so in this scenario, we're looking at, let's make this bigger. Yeah, a little bigger. This scenario, we're looking at a chart on Marvel, and it's a daily chart. You can see D for daily. And with this stock, it's in an industry that has done very, very well, and the stock has run a lot. You can see we were around $88 a share, where my pointer is, and if you look over here, you can see that's 88.37. And so the date is, well, it was March, right in there, March 20, in this scenario. It was around, I think I was somewhere over here. Anyway, we'll just pick a date. March 19th, we can see that date up there. And each one of these candles represents a day. And as the stock started to move forward, it eventually, started a very nice uptrend. And that uptrend lasted a long time. We went from March to being really up in the 300 realm by June. So think about it. We went from about $88 a share to $300 and something a share. If you look over here, you can see where my line is. $300 and about $17 a share. In a matter of a few months, it's almost four times your money for sure. Just about almost four times your money. So in 3 months, and then, we topped out in here, and then we started this downtrend that we've been on here. And so there are a lot of rules you need to learn about when you should buy and when you should sell, and what the charts tell you and the patterns and all of the things that we'll get into somewhat. And then it helps you when you have a disciplined way with which you evaluate all of this.